Hello, everyone. Good morning. Welcome back to the Prospero.ai stock market live streams. We're beginning here today with the markets red across the board. We got a quick pop of green as we open up today in the QQQ, but that is fading currently. A lot to go over today, a bunch of great topics. Hope you guys had a great weekend. If you're excited for the stream today, hit that like button, whether you're watching on Twitter or YouTube. We're going to get into the trade talk tensions that seem to be tightening again between the USA and China, both claiming that the other side is violating agreements that they've had. So this could be affecting the markets today. Where do we go from here, and what kind of resolution or lack thereof are we going to have? Obviously, the Prospero signals have been pretty bearish recently for the SPY and QQQ, so maybe sniffing out these tensions underneath the surface, even though the market has continued to kind of just meander higher recently. SPY is at 0 today, and QQQ is at 22. So both in the bearish level. If you're new, the bull bear line for the net option sentiment of QQQ is 40. So both well below that. And after we cover the market, how it's opening up today, that macro story, we're going to get into this crazy stat about Warren Buffett and what percentage of he owns of the entire short-term U.S. Treasury market. Just one man and one company, pretty crazy. But we'll get into that later on. I'll keep you guys guessing until we cover that later. Then we're going to get into the Mag 7 companies. I like to, from time to time, ask George about his overall rankings of each and just his general confidence in these companies, because it seems, as these companies go, the market will go, being that they are such a large percentage of the market cap of the overall market. So checking back in on the Mag 7. Then we're going to get into Regeneron stock and healthcare, because I feel like healthcare, I've seen a lot of stuff about it recently, how it's just been underperforming the overall market so much. And then I was reading some stuff about how it's underperforming actually to the most point since like 2009. So way back in the global financial crisis. Is that hinting at that we are, something is building under the surface, that these companies are collapsing recently. We covered Regeneron and how they bought how they bought the 23andMe data. So now that Regeneron has dropped rapidly, are they actually interesting with that data that they have acquired? Let me pull up Regeneron and see how they are doing today and give you guys some. So they're down 1.5% again. In the past year, Regeneron is down 50%. Year to date, they're down about 33%. So stock has not done well. Past 5 years, they've been down 20%. So yeah, Regeneron stock getting crushed. And a lot of others in the healthcare space like Moderna, UNH, we've covered, but just, yeah, a lot of blood in that sector. So can you pick through the rubble and maybe you have some safety as they have very low PEs currently, or just the overall thoughts for George on that sector? Then gold approaching all-time highs again. What does it mean for the overall market? Are people thinking that we are going to have a volatility surge soon? How does it affect Bitcoin? I want to check the VIX today. Yeah, the VIX is still under 20 at 1907. It's been kind of trading sideways for a few weeks for the most part. So are people thinking there's going to be a pop in the VIX, and that's why they're piling into gold? Then I have a couple final questions for George about a few companies that you guys like. So this Friday, there's going to be an S&P 500 inclusion or update, and people are thinking maybe either Robinhood or AppLovin will be added to the S&P 500. So which of those does George think has the better chance? If either of them are added, we will know by this Friday. Then I want to highlight Costco stock because it has an extremely aggressive valuation, seemingly more than Nvidia at the moment. So I got to ask George about Costco and if Costco is in a bubble or what's factoring into that. Hey George, good morning.
Morning.
And then last but not least, before we turn it over to the model portfolio at the end of the stream, pretty crazy that 10 years ago, the largest company in the world was only about $750 billion. That was Apple. Today, we have several that are over 3 trillion. So 4x since then. If you do the math on that, 10 years from now, that would put a company at around $12 trillion or more. So is that possible? And who are the contenders? We'll get into that later on. But we have to start off with the overall market, how we're opening up today. George is in the red. Seems like there's a lot of trade tensions that are may have been building under the surface that were kind of announced after Trump said that China was violating trade agreements, and then China responded and said that the USA is violating trade agreements. I don't think Bessent helped at all because he also said that China trade talks are stalling. Obviously, we've had the net option sentiment for SPY and QQQ in bearish levels. Help us digest all of this updates we got over the weekend and what the signals are telling us today.
Well, it's pretty much what we've been saying, right? That it was nice to see that there was pain on both sides and that they were, and that, both sides were basically willing to come to the table. But, as we've seen, and as we've been saying, there's no deal yet, right? There's no deal. And one of the things we said last week that I think is, absolutely on the table here in terms of escalations is that if Trump is picking additional fights with Europe, it also opens up the door for China to maybe push more, maybe to violate agreements that they weren't planning to violate if they feel like Trump and the Trump administration, can't, negotiate with the EU and negotiate with China. And at the same time, in terms of having like rising tensions in both of those, concurrent trade wars. And yeah, I mean, I think you see the Trump like taco memes. And it took me a little while to figure out that it was Trump always chickens out. I was very confused I was like, is there some relation to chickens and chicken tacos? But it took me a while to see the acronym. And, however you feel about Trump, however you feel about, any of this stuff, if the perception is that, Trump is going to back down. And I saw a few different graphs of like the stock market going down and then Trump kind of reversing course, pausing, right? So if that's the perception, maybe that's where some of these more hardline negotiations are coming with the EU. Some of the more hardline, maybe that's why, China feels like, okay, they paused it, but maybe we're going to, feel a little leeway to, push the boundaries of the agreements of that pause. And we're definitely seeing a nervous market, right? Where we saw SPY and QQQ net option sentiment, shoot up to healthier levels as the China pause was announced. We did say that if we didn't see these deals getting across the finish line, that we did kind of expect these tensions to rise again. And they are. And I mean, I think it's the same place that we've been. We need to see deals. And even if you're talking about last Friday, we saw that, the market got hit when Trump said the 50% tariff with the EU. Then the market finished a lot better when Bessent said, more deals. Deals are imminent. Deals are on the way. But we've been hearing that deals are imminent. Deals are on the way for a while now. And we need to see more deals, or we're just kind of postponing the inevitable. And the inevitable, like we already saw what happened, right? If there's no deals, if it escalates, if these tariffs actually go into force again, we know what happens to the stock market there. That's no longer a mystery. So yeah, I mean, we really need to see these deals come across. I would say, especially in light of, things like that additional credit downgrade. And I think, you're kind of hearing rumbles of like, if the big, beautiful, bill passes, that adds a lot to the deficit, that there might be further credit downgrades. And if we have further credit downgrades and the tariff war escalates, that could mean really bad things for the market.
And in May, the market actually had its best monthly performance since November of 2023. The S&P 500 was up 6%. But with the signals being so low right now and all of the, wall of worries that are piling up, what odds, or like how are you feeling about the performance we can have here in June with it being the first trading day over the coming month?
I mean, I think we're seeing a lot of people, right? We're coming off a pretty extended bull market, right? I think people were expecting a bull market under Trump. I think that's why a lot of people voted for him. And I think what we're seeing is a strong collective desire to want the market to be bullish. And I think there was probably an overreaction to just a pause. Like, as we said, there was a reason to be very optimistic, right? Because I do think the fact that China wants to come to the table and they agreed to a pause, I think was pretty important. So there was a reason for optimism, but the market got back close to all-time highs, and that doesn't really make any sense, right? Because when the market was at all-time highs before, that was before this credit downgrade. That was before, we actually saw how badly the market would react to tariffs if they were in force. And people were kind of like bracing for impact on the pricing of that and everything. So I do think that we got a little overexcited based on momentum. And even as that momentum happened, we were looking at a lot of institutions selling off equities. And we saw the biggest sell-off, we put it on this, we saw the biggest sell-off in Japan last week ever. So I think we're definitely dealing with many more headwinds than we were when we last, touched the all-time highs. And we also, in our newsletter yesterday, we talked about an ongoing story that we're seeing where, last time we looked at these long-term options drop-offs, right? Where stocks that had options of greater than 320 days to expiration last year, that no longer have them this year, I think is a pretty scary number. It was about 12% before. Now it's up to 16% from ones that had long-term options in 2024. We even included in the video for people that said that it's seasonal or whatever. But even in the article, like a definitional article about how the options markets work, it said that when long-term options expire, traditionally new ones are originated. So we're just seeing that drop in risk appetite. That's just another measure of it. So I think people have to be really careful. And what I see when I look around the internet are a lot of people that want a bull market. And that is typically how it goes. But I think the big difference between then and now is I don't think we've ever seen macroeconomic threats of this magnitude. And the tough part of it is, there's macroeconomic situations that you're just in, right? Like inflation, that take a little bit of time to get out of, or a war, right? Where there's uncertainty and it's going to create a downward pressure on the market where you're not sure you're going to get out of it. This is very different in that we're not even totally in a situation, right? We haven't really felt the impact of tariffs. Like, all we're feeling is just the threat of a very bad situation that is something that can get gotten out of very easily, or it can stay in force, right? All it takes is, we've seen, to pull back the tariffs. But I think that creates a very scary situation for institutions. People don't seem to be reacting as scared because, like we're saying, I think when people see, 1 week, 2 week, like a few good weeks in the market, they tend to get really excited again. But I really caution not to forget about these, looming macroeconomic events, because, unlike the other ones that I say, that's just a certain amount of time. It's very easy to say, okay, like, this is what I think the impact on the market is, because there are traditional things like inflation, where you can say, okay, this is where the projection is. This is what I could project from the market. This is where I think the bond market's going to go. So this is where I think the equities are going to go. But if you can't honestly say, I don't know if there's going to be a 50% tax on the EU and 100% tax on China, or if it's going to be 75 and 25, or if one's going to calm down and the other one's going to escalate, right? It's very hard right now to sit here and say, what is the right way to manage my portfolio around this, because the news can come at any moment, any day, as we've seen, over the weekend, as we've seen with the EU thing. So it's really just time that, even if you want to play momentum things, we have, right? We've been, we've gotten in Palantir, we got in GameStop, we got in some we got in some riskier situations, especially at valuations or wherever. So we are playing the momentum. But to that point, we took Unity Software this week. We took Palantir. I think we had another pretty risky one to start the week. But that is all to say, we took 5 longs, but we also took 8 shorts, right? So I think that's why I'm just and we're doing well with it to start the weeks. But that's just the thing. Most people aren't hedged that well. So I would really caution people to manage risk on both sides and not get too excited by these bull runs, because like we're saying, if there's one thing to take away from this, there really isn't the same thing in terms of macroeconomic stability than the last all-time highs. So if there's not the same, stability, that means there's a lot more downside if the downside does come. And we've seen it come, right? We've seen what happens when this tariff thing escalates. And right now we're definitely seeing signs that it could escalate a lot more again.
So it seems like there's from the times that we've been doing these live streams, kind of the most concerns, there's just from every direction, there's uncertainties. Do you think this spending package is the thing that's, covering them all up for now? The fact that there's going to be tax cuts and maybe more capital in the economy. And if that happens, are you worried about inflation at all? Could that be that final result of all of this? If tariffs and this, influx of capital, and then would that help Bitcoin, gold? Is that why those are rising? Your thoughts on that?
Yeah, I mean, inflation definitely. I think Bitcoin is kind of rising for other reasons, but yeah, I mean, I think inflation's a concern. I think that I do think that some of the stimulus there, especially for the stock market, there's tax cuts for the rich in there, as there have been, and when the rich get tax cuts, they tend to buy stocks, so that is that could be a stabilizing force. But like I'm saying, I think why there's more concern, right? You're not the bill is getting closer to getting passed, right? But you're not necessarily seeing that much exuberance in the market. Why? Because I think, the rating agencies and a lot of people are starting to say well, the short-term stimulus is nice, but things could start happening to our credit rating, right? And we just are in the habit of printing money by issuing debt, right? And if we continue to do things that way, depend on debt, and our credit rating is going down, we're going to have to pay higher interest rates. That's just going to keep inflating, and we're going to have to pay the piper at some point. I think, there's a decent amount of Republican senators, right, who are saying we need to balance the budget. This is what I was elected for, right? And they're right? The Republican Party used to be the party of limiting spend, right? And we need to limit spend if we're not going to. I've heard a number of senators say for our children, and they're absolutely right. If we don't start limiting spend, we're leaving a pretty bad world for future generations. And it's kind of it's kind of disturbing to see that both parties, right? It's not one or the other. It's both parties just continue to spend more, kick the can down the road, and no one's really doing anything about it. And I mean, it was interesting to see even Elon Musk come out and say, obviously you came in the Trump administration, they were very aligned, they're starting to diverge. Even he, who was such a gung-ho, Trump person at one point, obviously they've had a falling out. He might have his own motivations, but he's making the same point as some Republican senators, which is just we made these cuts and I think everybody agreed that cuts needed to be made at some point. I think everybody disagrees where those cuts need to be made, but you need to be able to limit your spending and also cut the budget if we're ever going to have a balanced budget. But I think, Elon is saying the same thing as some of these Republican senators, which is just like, we can't just keep cutting taxes and increasing spending. Like that's crazy. We're that is going to bite us. It might not be in 5 years, it might not be in 10 years, but if we're still increasing, if we're still, doing things like cutting taxes and increasing the budget for the next 5 or 10 years, we're pretty much creating a situation where we're not at all going to be able to get out of it. So it's nice that some people are talking about this now. I think more people do need to be talking about it, and hopefully we can get more on top of it soon.
Looks like Claire agrees with you too. She commented, very disappointing. I was expecting huge cuts in spending. And do you think it's this uncertainty in how the USA government is handling their finances that has led Warren Buffett and Berkshire Hathaway to owning about 5% of all the US short-term treasuries? I guess he's confident enough in the USA to be able to pay their bills, while other people are fearful. It's seemingly increasingly, and Buffett's, I guess, famous for buying the fear. Do you think it's a good strategy? What do you think Buffett's thinking, and why would he make this move of acquiring so much treasuries other than, he doesn't like any stocks and he just wants safety? Could there be any other motivating factors?
1 second. I need to answer this.
Let me just shout out everybody then. We have had over 1,000 people tune in between Twitter and YouTube already. So thank you guys. Hit that like button if you're enjoying the live stream so far and are excited for some more of our topics coming up.
So
a lot of different stocks.
Sorry, yeah, that was an important text. So Buffett, what was he buying?
Him and Berkshire now own about 5% of all U.S. short-term treasuries.
I mean, I think basically what he's banking on, if they're owning short-term treasuries, is that I guess that interest rates are going to go. I mean, I was going to say go down, but it might be that he's betting that they're gonna go up, which is a scary thought, right? Because I'm just like, oh, if he wants the short term, you want long term, it definitely means that you're banking on them to go down. So my first thought was wrong. So yeah, if he's buying short term treasuries, I mean, it means two things. It means one, that he doesn't see much stability in anything else, and he probably sees global instability. And I think you could certainly see anyone's reasons for that. But yeah, if he's not buying longer term treasuries, it means that he thinks rates are going to go up. And he probably thinks he's probably banking on instability, tariffs, increasing prices. Once that inflation comes, that they'll have to raise rates again. So yeah, I mean, that's probably what he's banking on. And I mean, you could just think about what we've been talking about this whole time, all this instability, that, at the very least, it's a good, he'll probably feel smart about doing it, even if everything's very stable. It's risk management, right? It's saying that, okay, I was worried things were going to collapse a little more, that the trade wars are going to escalate, but I'm happy I park my money in this, safer instrument. And now that it looks like things are stabilized a little more, maybe I look for equities. Maybe I do that again. But if things destabilize more, he's got the dry, he's got that short term. He's got the dry powder again to, probably invest in more short-term treasuries, because those will look like, again, attractive things to get some yield. And then maybe the interest rates keep raising, or maybe he's just doing the same thing again, saying, okay, if things stabilize after this, I'll put my money back in equities. I imagine that's what he's thinking.
So I wanted to get your temperature on the Magnificent Seven stocks here today, like we do from time to time, where we just take an overall ranking of the group. I feel like now they're trading as differently as I can remember. You have Meta and Nvidia and Microsoft. Actually, not Meta. Is Meta near all-time highs? Meta's close, but you have some that are right at or near all-time highs, and then you have Tesla, Apple, Amazon, 10 to 20 to 30% off all-time highs. Google too. So do you think any of those in that group clearly is in the lead position right now? And just how do you feel about the overall space? We've seen QQQ signals kind of looking better, so maybe that's a better sign for these companies as well than SPY. So just your overall feeling on the Mag 7 right now.
I saw you freeze. I don't know if that was me or you. How do I look?
You look good to me. Could you hear me?
Maybe it was just you freezing. You froze. I could hear you, but you were frozen. I think the Mag 7 are tough, right? Because if we're talking about instability increasing, we saw like them get hit, right? But I also think with the rise of AI, we're definitely seeing a lot of lift on especially the companies that are like involved in AI. I mean, Tesla alone, its sales are dropping, right? But its stock is recovering because everybody's excited about their AI application. But I will say this. I think there's a lot of any stock that stands to benefit a lot from AI definitively. So I think you're definitely talking about Amazon. You're definitely talking about Microsoft, and you're definitely talking about, Tesla, Nvidia, right? Probably Meta too. So really the odd stocks out are Apple and Google. And why isn't Google? Google could benefit from AI, but I think we're seeing a bit of choppiness, right? We're seeing them, recede a little bit after that enthusiasm for their announcement. And there's actually a funny story. I've been using ChatGPT a lot more. I started using it for just to edit my emails, and it really helped me with that. Last month or two, I've been using it a lot more. Like almost everything that I write that isn't a short email, I pop it through there. And then I started to actually use it to help me research stocks a little bit. Like I think I'm gonna write we're gonna have a newsletter soon on like the flying car stocks. I'm talking about a lot, and it's so helpful just to like be like, what are revenue projections? Like that used to take me like an afternoon of looking through things, making my own projections. And yeah, they're not perfect, but nobody's projections are perfect, right? All you have to do is see their work, and basically, and it actually shows its work pretty well. So that is a huge time saver as I start to research things. And like realistically, I probably wouldn't ever write that flying car letter if I didn't have that kind of support. That all being said, I was using it more, and I was like, it asked me if I wanted to get an extension to use as search. And I hated it for search, right? Because a lot of times I was just looking for some website, and I would type in like a word of a company I was looking for, right? Like all the time I use Google. Like I open up my search thing and I'll just do like product hunt, and I'll type in product hunt. And which, by the way, we went live on product hunt yesterday. We love upvotes for the Prospero.ai product hunt. But, you notice little things like that. Like basically I type product hunt into like my search bar, goes to Google. I'm clicking on product hunt within 3 seconds. Like I type product hunt into ChatGPT. It's giving me a long paragraph on product hunt. There's a link somewhere in there, right? But it's typing. It really extends my time. I notice that wait time. I'm not just like click. So that is all to say, I think that maybe the death of Google is a little overblown. But if you're talking about stock price is all about perception. And I had another funny story is I had a really funny Gemini fail where I was watching the Thunder and Timberwolves game. And I typed in who is the Minnesota Timberwolves best free throw shooter. And it said Stephen Curry is the best Wolves free throw shooter, like at 93.1%. And and then the next line was like, but he's not on the Timberwolves. Like, so I like watched it. I watched Gemini kind of like fail right in front of me. And that's all to say all the following things about Google, right? People are thinking that the death of it is too early, but if they don't stop making Gemini or whatever AI they're using like such a shit product, like they're not going to manage the perception around their eventual decline. I think that's the biggest problem. I think if Gemini was a better product, their stock price would be doing better because they'd say, okay, they're going to figure out this generative AI thing, right? Which is the long-term threat. But they're not figuring it out. They've been around. They've been doing this for a while. And Gemini is still like by far the worst generative AI I've interacted with. Apple's basically punting, right? I actually had a funny experience with Apple the other day where I was asking it, I was like, by my school, we were actually filming our crowdfund video. I was by my high school. And I was asking like, how many people took the Stuyvesant test in New York? And I asked Siri that. And Siri like misheard the word, misspelt it, and then like sent it off to ChatGPT. And then ChatGPT couldn't do it because it was past bad words from Siri. And I just thought that was just hilarious, like what a bad product Siri was. But that's all to say, like, Apple's in big trouble as it relates to AI. And if OpenAI and Johnny Ive are building some new product to come for Apple, like I think those two, like Apple and Google, are in serious jeopardy beyond the other ones. But that's all to say there's going to be some lift from AI for those other 5 stocks that I named. And what I always say is, like, if you're going to buy one stock over the next 10 years, it should be Amazon. They just do everything so well. But if we have more, tariff issues, we've seen growth stocks, especially growth stocks that trade at high multiples, get hit really hard. So that's the other side. And I do also think that's what makes stocks like Amazon and Nvidia probably a little safer than the other one, and Meta too, I would say. A little safer than the other ones because they trade at a bit of a safer multiple to earnings now. But we saw like all those stocks got hit hard during the tariff thing. But like I'm saying, we don't know if that's coming tomorrow, bad news tomorrow. We don't know if it's coming in 2 weeks. We don't know if something's worked out or the pause is extended or anything like that. We just don't have enough information. So the only way to approach this is really just making sure you're well hedged.
And Mario mentioned he likes Perplexity, which I think Amazon has an interest in. And then our other Mario actually said he uses lightweight AI as an option in Brave browser. So to build on your Amazon point, looks like Perplexity is one of the better ones too, from Mario's point of view.
Yeah, I've tried Perplexity. I think the problem is that you use it a little differently than Google. And I've just used Google for so long. It's like even just what I was saying, it's just like not in my workflow. But I haven't tried lightweight AI or the Brave browser. I guess I'm just like right in the Google. I'm so in the Google ecosystem that I haven't really thought about it too much.
So I wanted to bring up the healthcare sector again today because Regeneron, we actually covered them recently because they acquired the 23andMe data. They had a trial fail some studies and they were dropping big last Friday, I think like 20%. And they're now down over 50% in the past year. There was the UNH collapse. Moderna has collapsed. Novo Nordisk has dropped a lot. I was reading something on Twitter that was saying that the underperformance in the healthcare sector has been the most since 2009. And I'm wondering if you think the fact that these stocks, which I think are generally deemed as more stable and value oriented, the fact that they're dropping so much, is that an early warning sign that we could be in a period of time that's, more volatile than I think people would even want to like admit, even if you are a little bit bearish, like it could actually be worse than that under the surface that these stocks are signaling?
No, I mean, I think there's a reason. I don't think it's a big mystery. I think that especially like RFK is pretty hostile to the healthcare sector, right? And it's just like, which I don't think is necessarily a bad thing. I think we've needed to have this fixed. But I think the problem is it's the same problem with the stock market, right? If there was some communication and if there was some policy that was going into effect that everybody could say, okay, I understand this. Like, but it isn't. You get a headline about like, prescription drugs being a certain price because Trump said it, or basically, a lot of what's going on behind the scenes, just like undermining, vaccine support, production, research, anything like that, right? A lot of these companies are funded by research, right? I just think there's so many issues with the communication around this, and it's not in the traditional way we've seen. I think because there's so much, I'd say, especially with this administration, of kind of like cutting funding. Some of it makes headlines, some of it doesn't. Like, I think what we've seen traditionally in the past is bills get passed, bills go in, and people can see like, okay, if this bill passes, this is what's going to happen, right? And then by the time it becomes law, a lot of people know exactly what's happening. But we have lots of things that are an issue with it, right? We have like talk that doesn't become policy, that a lot of this talk gets reacted to, right? Then we have funding cuts, some of which are announced, some of which aren't. And sometimes like someone gets asked about a funding cut and they say, no, we're not doing that, but they are really doing it, right? And so I think that's why we're seeing all this volatility in healthcare. And like, I can't even really speak to it, right? Is Eli Lilly overvalued? Eli Lilly trades at a high multiple. That really depends on if drug prices are going to be changed in some way. They really depend on newer drugs that tend to cost more, right? And then it also really depends on like, is their research budget going to be different? They rely heavily on R&D, and if they're not necessarily getting subsidized for certain things, that could really change the calculus, right? And it's certain things, right? We don't really know. It could be that funding's cut for one thing, but not the other. It's a very, very hard time to look at stocks. And I mean, I think healthcare are the hardest stocks to look at, which is why it's actually kind of funny. Like, we're just doing a variation on our strategy this year that we normally do. We normally have kind of like a diversified long portfolio that has a lot of high growth in it, right? And we'll short a little on the other side of it to balance that. Normally less longs and shorts. This, in this volatility, what we've tended to do is keep only our biggest upside longs and then kind of outnumber them with as many shorts, a bigger makeup of large cap shorts. So we really changed that because that's what we're dealing with, right? You have to be prepared for the market to go to the downside at any moment, but also like if positive news events happen or non-negative or negative news events do not arrive that might have been expected, those big growth stocks are gonna pump. But healthcare is even harder than that, right? Because you never know. Like, I don't know if Eli Lilly is going to like keep on this run. It's got a very high net option sentiment. It has. That's the only reason it's in there. But who knows? Something can come out tomorrow that is a very negative story for them. And the difference between the tariffs is, at least with the tariffs, there's some dates we understand, right? We do know this, China pause date is going to be huge, and we want to like ramp up, hedging going into that if it's approaching, especially if all this like, negative talk on both sides keeps happening. But the healthcare thing, you just don't know. Later today, there could be something about prescription drugs, or there could be something about research funding getting cut that could hurt Eli Lilly. And that's what makes it really, really tough in healthcare, especially.
Well, you've mentioned before the efficiencies that the mega cap tech companies are getting from AI. I feel like maybe healthcare is an underrated industry that's going to get big efficiencies from their AI and their research. You were talking about the R&D spending. But besides that, the other major risk you highlighted was like the RFK and just the current like culture and political environment. But that can shift in 4 years. So is there a point when these stocks are pricing all that in and it's, an opportunity?
I mean, it could, or like, I mean, but you're banking on the political situation changing, right? And like, I think I mean, I'm not sure how long it's been since a Republican candidate got that much of the popular vote. So is banking on change really the smart thing? I don't know. I don't think I want to bet, like, I don't think I want to hold Eli Lilly for, 3-4 years banking on that. Maybe if we're a year out from the election and it looks like a Democratic candidate that's talking about, like, that's looking like they have a good chance of winning, talking about a lot of medical research again, like putting grants out there, like, I don't know. It's hard. I mean, and what's Eli Lilly trades at a pretty high forward EPS. So I'm not sure the levels I would need to justify that.
I see a new comment from Dean Birch. If we see a full bear market potentially in 2026, do we think it will get to a stage with Prospero where we only see shorts?
No. Just like in the bull market, we'll always have, we'll rarely go like, I think like 5 longs, 2 shorts. I mean, I think we've gone like maybe like 8 or 9 longs and 3 or 4 shorts. But we always go long short, right? It's the right way to manage risk. I know that's not in everyone's profile, but if the market turns, if you have the right shorts, even if you have a lot of longs in your portfolio, it really helps. And same thing, right? But it flips, right? I mean, 8 shorts and 5 longs is a lot for us. But QQQ net option sentiment is at 23. So we did hold on to more of those growth longs than we otherwise would have, because QQQ net option sentiment was a little higher. But like, if we're looking at a 0-0 situation where we've seen, we'd probably go like 2 or 3 longs and 6 to 8 shorts. That's probably like the lowest ratio you'll see for us.
Okay, time to shift the vibe a little bit. We've been talking about a lot of the risks on the market. I feel like it's been a little doom and gloom so far. So let's look ahead to the future. So I asked ChatGPT, speaking of ChatGPT, what was the largest company in 2015 and what was their market cap? And it was Apple at $775 billion. And today we have companies, there's several that are like $3.5 trillion. So it's about a 4x from where they were 10 years ago. If you multiply that forward 10 years, that would put these companies that are $3.5 trillion at about $12 trillion. Do you think it's possible in 10 years? It sounds like a staggering number, but that some companies can be at that point 10 years from now in 2035. And if so, what are some likely candidates? I'm wondering if you think Palantir is in the discussion for something like that, or even any other unlikely or maybe like mid to major cap companies right now.
I mean, can you repeat the question one more time?
So just firstly, do you think in 10 years there can be like a $12 trillion market cap company? And then what are some, likely candidates? And is like Palantir in that group, or any others that are kind of like smaller than the really mega caps
I mean,
right now?
I think it might even, like, we're looking at an exponential curve. Like, I think it might even be more than that. I mean, I think if you're looking at just the most likely, it's still NVIDIA, right? I think just because if there's one thing we know for certain, we're going to need a lot of high performance compute. Like then, like I'm saying, like Amazon will be there. I think NVIDIA, we talk about Amazon over the next 10 years. Like, I think NVIDIA's got more risk than Amazon, but I think NVIDIA has more upside than Amazon do. I think Palantir, I think I would bet on before I would bet on Palantir, I would actually bet on, things like the quantum stocks or some of the nuclear stocks. Just because I think Palantir is definitely in that conversation. But we don't know the extent that their technology has staying power, right? That's my one reservation. They're kind of new. They're not really that high in revenue. yet where we can say like, okay, there's the applications. It's definitely there. But in terms of like hyper growth, they might not, there might not be enough customers that need what they have and or are not building their internal tools and or there aren't leaner substitutes that are just like, because Palantir is kind of a generalist, and I think we're actually going to see a lot of AI companies that start to specialize. So yeah, I think that's what we're looking at. But I think it's like the boring. I think it's like the boring answer. You like the biggest odds there are like Nvidia and Amazon.
So in the S&P 500 this Friday, there's going to be a new mix of companies added and dropped. A lot of people are speculating that Robinhood or AppLovin could be one of the ones that get introduced into S&P 500. Do you think either of them are more likely in your opinion? And yeah, how do you think that would affect the stocks if it is announced this Friday for one of them?
I've bet on both of those to be added before, so I don't know if I'm gonna get there again. I mean, I think they'll both run seriously if either of them gets added. AppLovin especially, right? Because there's all these shorters there, and like I think that I'd consider adding it just on the potential for it to run, right? Because if you're thinking about it, like all of these shorters, if it gets added to the S&P 500 with all those ETF ads or whatever, they'd almost have to close their position.
And I looked at AppLovin signals this morning. They're actually really good. Let's get a live look in Prospero for AppLovin. I think it was like 94 and 95 for upside in that option sentiment. Right now, they're both at 93. Let's take a peek at Robinhood while we're at it. Might as well. 1 second. Robinhood is at 94 and upside and 87. So they're both kind of up there.
Yep. People getting
they're
excited.
Both
added. Yeah. I don't I think there's a lot. I think there's a lot of upside for both of them. And I might be like, oh, I mean, we'll see how the week plays out a little bit, but I'm talking myself into adding AppLovin to hold through that, that ad drop.
What do you think about a strategy of just like, there's a lot of people that are thinking kind of along the same lines as you. So maybe like adding AppLovin and then just selling it the day before, just trying to get the ramp up, and then you kind of don't get the risk of the actual event. Would you ever do something like that?
I mean, in a different market, maybe, but I don't really think it's. Yeah, I don't really think it's bullish enough for that, right? Where these indexes are, like that's a good play. I think if the market is just carrying up and more people want to speculate on a high growth thing like AppLovin, but I don't think you can bet on it based on that alone.
Mm-hmm. So we have one more topic to get into today here before we turn over to the model portfolio update. Last, thank you for everybody tuning into the stream today. Thank you guys for being here. I saw a comment from Mario earlier saying he was a little caught off guard by the stream time. So thank you everybody who found your way here today. Like the video, hit the subscribe and follow button if you're watching on Twitter or YouTube. But one more topic here. I want to get into Costco and asking you, George, is Costco a bubble? Because it's currently trading with a PE around 60. And if you compare the PE forward for Costco versus NVIDIA, it's pretty insane to see that Costco has a higher forward PE based on like the next 2026, 27, like all throughout. So what's going on here? How has Costco been able to, create such a high valuation for their company?
That's crazy. I mean, I think a few things, right? I think, in this like retail driven world, we like people liking brands really matter, right? That's thing one. But that's still nuts. Like And then I think you have this like economic difficulty, consumer defensive, people like valuing it, be like, oh, if there's problems, more people are going to be buying from Costco. But that's still insane. That just tells you, like, I think that's where the market's really changed from where I started looking at it. I don't think you had those inefficiencies before. I think things were a little more bound to PE than they are now. And it's just like, it's kind of like, I was talking about this on a Palantir space last week, where it's basically like, once momentum gets a hold of something, then, you know, even institutions are like, well, this doesn't trade at value, so we have to play it according to like where the momentum's going and get in on those levels. But yeah, that's crazy.
So, but it sounds like even though it's crazy and you're saying it's insane and maybe it's overvalued, it's not an attractive short for you just based on that point. Like, there's no telling of when it's going to find like its legitimate value, or you don't see that and go like, oh, it's got to drop because it's so highly valued.
Yeah, I mean, yeah, I mean, I wouldn't. I mean, there's a lot. Like, I don't think you can short these things, right? It's just like I don't like Apple. Like, I think Palantir is definitely going to go down at some point. Maybe not definitely. That's why I wouldn't short it. But I think it's like likely to go down a decent amount, 20-30% at some point. Just based on these valuations, it'll have a dip. But like, I'm not sure of that, because you don't know if like the retail fervor for these stocks will carry them up. And I think a lot of institutions feel that way too.
All right. Well, the time has come. Let's do the switch over and get into the model portfolio on the other side.
Yep.
All right. So everybody stick with me. George will join right back in, and we will do the model portfolio update, where you'll get to see the live adds and drops in the Prospero model portfolio. Let's do a look around the markets and the Prospero signals to see if they've changed in the meantime while we've been talking. Thank you, everybody, for tuning in today. All right, let's take a peek. So the QQQ has gone back in the green. Looks like all of the markets are kind of drifting up here over the course of the past hour. The SPY is still slightly red. The Dow is actually down the most today, and the Russell is, along with the SPY, just slightly in the red. The VIX is currently dropping. It's now below 19, so heading downwards. Let's take a peek at the Prospero net option sentiment level for the SPY and the QQQ. All right. Okay, everybody, the SPY is no longer at 0 for net option sentiment. It has climbed all the way up to 1. So not at the absolute bottom of the barrel now. And the QQQ is at 23. So both of them still in the bearish levels, but I think they're both one higher from their lows. I think QQQ was 22 when we looked in the beginning of the stream as well. So can you call that a trend higher? Maybe not just yet, but not at the bottom. Let's look at the market, see if there's anything moving bigly. The Mag 7 split today. Apple and Meta are in the green. Let's check on NVIDIA. NVIDIA is also green, but Google, Tesla, Microsoft, Amazon in the red right now. If there's any stocks you want to look at while George is doing the model portfolio, feel free to comment them in the live chat on YouTube or Twitter, and we'll take a peek. See, some of the nuclear stocks are down today. The air taxi stocks are down today. Let's take a look at the quantum stocks. Quantum stocks, mostly red. CoreWeave is actually in the green, which is a little bit surprising to see when all the rest are red. Anything else we want to peek at? You know what stock's been on a crazy move? Maybe we have to talk about it Wednesday a little bit more. Roblox, now up 51% year to date, firmly in its 52-week highs. Over the past year, it's up 160%. So yeah, maybe we have to look at Roblox and talk about it more on Wednesday. Mickey Roggs, you want to look at UNH? George, Mickey is asking about UNH stock. And we got another, Mario's asking about CrowdStrike with earnings today. I don't know if he's muted. I don't know if he knows he's muted or not. But 1 second, Mickey. We'll get right into it. George, you're muted if, yeah, you're muted. Where'd he go? Did he not know he was on? Well, I'm looking at UNH and Prospero, and the signals look very good right now. 94 net option sentiment, 84 upside, 89 profitability. We'll see what, we'll let George give his final stamp of approval or disapproval, but looks like the signals are kind of bullish on it. CrowdStrike has earnings today, huh, Mario? CrowdStrike a little lower signals than UNH and Prospero, 69 net option sentiment, 66 upside. What's going on now? Did we lose George? Oh, it's up from 55 this morning in net options. Let's look at the trend. So for UNH on the net option sentiment trend, it's been like spending a lot of time in the high 80s and 90s, but then it's had 2 dips recently. So good to see it come back up from that. What did it get all the way down to? 50, as low as 53 on, looks like Friday, and that as it opened up today. So I think I did see, I don't know if George is still holding it, but I think he did add it recently. We'll see. Let's see. I'm not sure what's happening with George's camera feed right now. We'll try to get it sorted out. See if he hops back in here. Oh, we didn't check on Bitcoin. Let's look if Bitcoin is up today with the market. Bitcoin is red today. Currently at 104,200, so it's slightly off the highs. It hit on May 22nd. Bitcoin was as high as 111,000. So Bitcoin's pulling back a bit from its all-time highs. See where it finds its levels. Hello, Nicole. Welcome in the chat. Welcome, welcome. Alrighty, George. There we go. I think he's back.
Yes, my microphone was deciding it wouldn't work. Let's do UNH.
Sounds good.
So, I mean, basically UNH, I dropped just because I liked Eli Lilly a little better this weekend. Yeah, I mean, it did close at 55 net option sentiment. That's pretty much why. I mean, it's a stock I would add if it wasn't for, I mean, it's looking really good. It looks like it might be about to come up from a bit of a bottom. It looks like it reached a double bottom. You know what? Here we go. We're adding it now. I'm convinced.
There you go, Mickey. You got your answer.
Thanks,
there.
Mickey. Yeah. I think it is time. All right. Let me just get that. After just insulting healthcare all day. Here we go, adding a second healthcare stock to our portfolio. It looks really good. Thanks for bringing it to our attention.
We got to take a peek at CrowdStrike too for Mario. After.
I mean, I don't think I'm going to be playing CrowdStrike earnings. Where's my trading letter? Oh, there we go. Okay. We're done with that. Let's check out CrowdStrike. I mean, I already kind of know what I'm going to say. Nah. I mean, 69 net option sentiment, not doing it for me. I mean, why wouldn't you look at cyber, right? Why wouldn't you do that? 92 net option sentiment, 80 upside. That's my answer. Why would you play CrowdStrike earnings at those levels when you can get cyber at a better price? All right, let's get the model portfolio set up. Okay, that. Let's get that.
SPY net option sentiment climbs all the way up to 3 on the day.
Oh, wow. Where's QQQ?
QQQ is at 27 now.
Wow.
Mario said, I'm long with crowd for several years and way up, so just sitting.
So you're not ready to switch to cyber. I wonder how many days in a row I could make the trading letter have a tariff theme.
All of 2025.
I can just maybe I just start calling it tariffs every day.
Tariff update letter. No more trading letter.
The daily tariff update. Okay, I got that. Well, we're in June, everybody. Happy June. I don't know about everybody here, but it's still pretty cold in New York. I woke up cold. I can't remember the last June that I woke up cold that it wasn't because the air conditioner was running.
I feel like we've had terrible weather recently, but I see a 91, George, for Thursday, so it's about to change.
I said that was going to happen. I'm so annoyed. We didn't get spring.
Yeah,
I was just telling someone that's what was going to happen, right? We're missing the wonderful 70s weather. We're going straight to that annoys me. I'm not happy about that 91, Steven. I want my
I agree with you. Low 70s and right around there. You can just walk outside. It feels perfect.
Yeah.
Enjoyable.
Yeah.
Small caps continue to slump. We have exposure there, but we'll look for more bear names. On the bull side, we are already strongly allocated to growth. So we will see if there are cuts we can make in other places. And allocate a little more long exposure to growth. Consumer discretionary is an obvious bear target, but we will be careful not to over allocate there as well. Definitely time for an energy bull. Anything else we will be opportunistic about.
Oh, damn it. Oh, whatever. I'm not supposed to change that. $32. Oh, SMCI finally dipped below. Is FLR a win? It doesn't matter. I think I'm keeping it. Oh, man. Well, look at how well we're doing on all these shorts. That's a lot of blues. Like always, we're going to be cycling through these shorts. Oh, Palantir's up here. Wow. Glad we held. Oh, and we added UNH, so we're definitely going to have to have even more. We already had 2 UNHs. Oh, we're pretty over allocated there. Okay. These are all good ones. RGA, sure. Garmin, why not? Garmin's really up and down. I feel like man's always low down there. What's going on here? Do we have this open? Oh, yeah, we already have one. Do I want another? Sure. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, we can pick up something here. We're looking for, we don't have any energy. Oh, here. Let's grab 2 of those.
We have someone named Rock on Dax in the chat saying, "Yes, sir, I'm here. Thank you."
What does that mean?
I'm not exactly sure, but I
Thanks,
feel like
Rock.
the stream.
Thanks for coming. We're excited too that you're here. I think that's. All right, that's done. Now let's take a quick. I thought like all of our stocks are doing well today. I don't know why we aren't farther up. Where's the loss? I'm confused. All right, well, maybe we're not going to solve that. All right, that all looks good. How are we doing on the shorts? Ooh. Something to watch. Yeah, there's some ones to watch for. Let's see, Logitech is. Okay. Let's take a look at Logitech. I don't think we have to get out of it immediately. Are there any pairs we really like here? Let's make sure we don't forget to send this. Oh, we got a minute. Oh, no, perfect. Wait, did I just see? All right, let's check out these bears. What's going on with Qualcomm? All right, so we're looking at Qualcomm. how about this enough? Because we are pretty long healthcare now. Oh, I think I like this trade. Yeah. Getting out of Logitech and into enough. I just want to verify that we're still going to be in a win here. Oh, it's even lower. Yep. All right, we still got to win. Okay. I feel good about this switch. We're going to keep our eye on fiber too. Okay. Oh, oops. I've been sending these out to all subscribers instead of just my paid ones. All right.
Lucky
A few
Prospero
bonus
community.
things for all of you. All right. Any last questions? I mean, I guess everybody here gets to see it, so no bonuses there.
No questions. Nicole said, bye, everyone. Have a great week. We will be back live normal time, Wednesday, 3 p.m., everybody. So see you all then. Thank you, George. Let's have a good investing week, everyone. Bye, guys.